Having a basic understanding of supply and demand is definitely a must when trading stocks. And the biggest thing here is understanding exactly what's happening and what creates a trend and how it relates to a graph, or in this case, what we're going to go into next, a chart. So right here you can see the green arrow, and this I'm just symbolizing buyers. If you want to get into the stock, you're going to have to pay more. You're going to have to bid more. So if you think back to level 2, instead of waiting to fill, you might have to put in a higher bid. And if that doesn't fill, you're going to have to put in a higher bid, or you're going to have to take the offer, which is the right side of level 2. So as it's going up, that's what's happening. People are willing to pay more because people are not willing to sell it for as little. So as the bids go up, they're trying to find the market. Where are their sellers? Okay, if they won't sell it here, maybe they'll sell it higher. Nope, they won't sell it there, I'll go a little higher. And at some point, it's going to meet other offers or other sellers, and there's going to be a point of equilibrium where buyers and sellers meet, and it starts to trend sideways. And at some point, it's going to exhaust all the people that want to buy, and there's going to be some type of supply left over where sellers are like, okay, I've sold, but I still got some more to sell. And then, oh, now the buyers aren't willing to buy it at the price that they were before because they see the increased supply coming down, and it starts to come down, and people think, well, you know what? Maybe I can get it lower. I won't bid as high. It's starting to pull back. I'll wait a little bit. I'll wait a little bit lower. I'll wait a little bit lower. And now, instead of the buyers searching for where sellers are, the sellers are searching for where the buyers are. And with that comes, instead of maybe selling it at 7, then they say, okay, I'll come down to 690, then 680, then 670. But if they can't get a fill, if they can't find a buyer for it, they're going to keep on coming down until they meet yet another point of equilibrium where the buyers finally step up to the plate, and instead of excess supply, there starts to become excess demand, and the price starts to trend back up again. People are willing to sell it, and these people that just bought, well, you know what? I'll wait until up here to sell it, and at some point there's going to be another point of equilibrium, and it's going to start to fade back down. And that's exactly how the supply and demand works. So if you add 2 lines to this graph, it'll start to make a little bit more sense as to what consolidation is. And consolidation is pretty much the sideways price action, where sellers are meeting buyers and buyers are meeting sellers, and it trends. So at some point, it's going to break through that consolidation. At some point, it's going to meet buyers at a higher level than before, and the buyers are going to start to exhaust the sellers, and sellers are no longer going to be willing to sell at these prices, and they're going to expect either a higher sell, or they're going to hold it, and buyers are going to start to feel like, hey, I got to pay a lot more now. Oh no, I've got to put in a higher bid. And at some point, between the excess demand for it and lack of supply, it's going to break out, and that's exactly what's happening here, and where you get some very big trend reversals and breakouts. And the key thing here to focus on is you can see where it met a point of equilibrium, and then down here, same thing again, but then it started to go up and it slowed down a little bit, but then it met a higher point of equilibrium. And then it started to go up from there, and the buyers, the demand grew. And we're going to come back to this because this is exactly a pattern that we look for during the day while trading. So now let's take a look at the exact opposite, a breakdown. So as you can see, the same idea where you've got buyers and then you meet equilibrium, and then you've got sellers and you meet buyers, and then you have a lower point of equilibrium where instead of the buyers pushing it up and willing to pay more towards this consolidation line, towards this prior top, they've decided that they want to get out at a lower level, and then they're willing to sell a little bit lower and a little bit lower and a little bit lower, and at some point it's going to break that prior consolidation area, that prior support level, and the excess supply is going to overweigh the demand, and right where this orange is, it's going to break down, and then you have a big break down instead of a breakout. So it's just the opposite of a breakout, which is going up this way. Instead, it's a breakdown, and it exhausted all the buyers to the point where they said, you know what, we'll wait till lower and we'll see what happens, where it goes. And at some point, everybody's going to start to sell, and put their offers lower and lower and lower. And again, it will meet a point of equilibrium, but at a much lower level.